inverse fair value gaps. I just like to call them inversions, but we're going to cover them today, go over exactly how we use these in the market to our advantage to increase our probability on trades, because ultimately that's what we're trying to do in every single video. But what are inversions or inverse fair value gaps? They're pretty much areas in the market where price is overlapping a fair value gap in the opposite direction. And what does this tell us? So we learned in the last video that when price is making a fair value gap like so with this 3 candlestick pattern, we are clearly showing very bullish momentum and we're having bullish market structure, and this is very good for price. And if we were to have a retracement, we would expect that this bullish weekly gap right here, let me mark it out, would hold and that price would come into the zone if it were to retrace and then continue back to the upside to continue in this bullish trend. Now with inversions, it's going to be the exact opposite. So instead of price bouncing within this bullish weekly gap, we see that we get a very serious candlestick to the downside and we end up closing in this gap. Now at this point, you can't really confirm anything right here, but then we see this next candlestick and it's even further to the downside, confirming that this bullish gap right here is not going to hold. And when we think about this, we can kind of understand that that means that this market structure and this once bullish trend might start to move into the opposite direction, because if it was going to continue higher, then this zone right here would have probably held in the market. So you can see how these inversions just increase our probability to potentially take a trade. So how do we mark these out? Well, we see that we've made this bearish weekly imbalance right here, like so. So we can just find the area that overlaps the two, which will be this very thin area right here. Now, as far as entries go, you don't always need to enter with an exact tap of the inversion, but the inversion is just there. And I just like to look at it as another confluence that price is not respecting this bullish market structure anymore. And it's giving us an even stronger reason to potentially be bearish and start to short the market. Now, if this were to hold, let's just say price came into this bullish imbalance right here, bounced up and then chopped down, making a bearish gap like this, it would not be as strong as we have this very strong impulse move down. Hopefully I explained that right. We're going to go into a lot of examples so we can really nail this down, but we can just go ahead and mark it out where the two imbalances overlap like so. And this is going to be our inverse fair value gap. I'll just highlight it in purple. So when price revisits, whether it's just within this zone or this zone up here, we can expect a further move to the downside. Now let's just go right into some examples. Hopefully you understand how we can mark this out. They're pretty much just two overlapping fair value gaps, one going in one direction, the other going in the other direction. Let me remove these drawings here and we will get into some examples. We're here on Bitcoin on the weekly time frame, and I'll just show you this. So I like to view inversions as areas where there's very strong pivots in the market. You'll notice not all the time, but a decent amount of time, major bottoms and major tops in the market are formed with inversions. So actually I want to show you a version first on Solana. An example. Okay, so we're on the Solana chart on the weekly time frame, and we see that we put in this initial high, which swept out this all-time high here. I'm just using this because I use this holy stutter. I use this example in a lot of other videos, so I just want to show you how everything is cumulative in this series. So we go ahead and sweep out this all-time high, putting in this first retracement. No inversion on this retracement. But then we see we have another impulse move up. We sweep out both of these highs, and then we create a bullish weekly imbalance. We can go ahead and mark this out like so. And what can we say about this bullish gap right here? Well, if price wants to continue making new all-time highs and tell me that we just want to keep continuing higher and this is not just a sweep of these highs right here, then we would probably come into this bullish weekly gap, bounce in it, and continue higher. In that case, we did not do that. We ended up closing pretty much all the way below it and then having another week down. And this overlapped it by making a bearish weekly imbalance, and then we can figure out the area where they overlapped, which is just this zone right here. And then what happens? We don't get an exact tap back into it, but this confirmation here gives us about a like 50% move down on Solana. So again, like I said, a lot of people like to wait for this to get tapped, but on the high time frame, you'll notice that a lot of the times these actually do not get tapped, but instead they are just confluences to our trades, and we can scale down to the lower time frames and potentially find a better way to enter this, so we make sure we get all of our positions filled without getting left behind. So there's just one example. Now we can probably go out to like daily time frame on Sol and find another example. So right here, we can see that we put in one high in the market on the daily time frame, no inversion at all. We have a small move down, and then we ultimately resweep that high with this bullish candle right here, and we create a daily imbalance. We see that we had the daily imbalance right here. And then what happens after that? Well, it gets fully disrespected. So if we wanted to respect it, price would have probably came down somewhere here, put in a wick, and continue higher, and continuing holding these highs right here. But instead, we totally disrespected that and had a strong move to the downside, making this bearish daily imbalance. And then these two overlapped, and we can see that this one actually did get tapped into with this daily wick. And then what happened after that? Well, we had a ginormous move to the downside on Solana, about a 20% move. So we can see how these imbalances are key to marking major highs and lows in the market. And why do we use these? Well, if you look here, we had no imbalance. So when I'm looking for a major high or low in the market, I'm usually looking for an inversion of one of these gaps right here. So in this first initial high, we did not get that. And like I said in the liquidity sweeps video, a lot of the time major swing points, major highs and lows in the market are formed with at least one sweep of it. It's usually not perfect, just come up one time and then we'll move just straight down. It's never that simple. Dude, hopefully I'm explaining this good. I feel a little tweaked today. Okay, let's go on to Ethereum. I think I highlighted this example here in the previous video, but we can just go over it. So what happens? Well, we sweep out these lows right here on Ethereum, and we are clearly in this bearish downtrend with all of these red daily candles to the downside. And we are trying to figure out, if we are bullish, where price is going to reverse so we can potentially shift this bearish trend. And what happens? Well, we can just mark out all the fair value gaps that price is making. We have this bearish one here. And instead of respecting them, so we can go over where all these gaps are getting respected first, so I can just show you how inversions are pretty powerful to understanding reversals. So we have a bearish inversion right here, but we can just see that this overall bearish daily gap gets tapped, and then we move to the downside, and we are still respecting all of these gaps. But we can see that once we form this one, after sweeping out this low, we get a strong daily impulse to the upside, and then the next day as well, and we form this daily inversion where price does not tap into, but it's a good confluence that you could potentially start looking for longs in the market. And where did price actually bottom? Well, it was just in this bullish, really big bullish daily imbalance. So this is an imbalance plus an inversion. And then what happened after that? Well, we had a very explosive move to the upside, about 100% on Ethereum. Let's see where else we can find an example. Okay, so we see right here, price has a sharp move to the upside. This is actually perfect for fibs. We're going to go into fibs in another video, but we can just look at this inversion here. So we have a nice big bullish imbalance like so, and then price comes down, big bearish impulse down, creates an overlapping gap. We can mark this out, and then price taps right into it before having a very nice move to the downside. Now, this also happens on lower time frames. We can go onto the 4-hourly on Bitcoin, and I can show you some examples of major pivots where we've formed inversions. So both of these zones right here, so we have an initial high put in the market. We have a very strong impulse candle up that's creating this 4-hourly imbalance. And then we have an impulse to the downside. We create this inversion here, and then we tap into it very slightly before having a nice 2% move down on Bitcoin. And then same thing here, but this time we actually swept out this previous high that we made, put in this like high right here in the market. We have this imbalance right here, boom, and we also inverted this gap as well. And what happens? Well, we have a ginormous move to the downside. I mean, this really didn't get tapped. Oh my God, guys, I'm sorry, I can't speak. This did not get tapped until we moved 15% to the downside, and then we had another move up. So we can see that we're not trading directly off of inversions on the higher time frames, at least. Sometimes I do use them on like the hourly and the 30 minutes to enter exactly in them, but we can just see how they are marking key areas in the market where price is reversing after either sweeping a high or sweeping a low or just coming into key support and resistance. We can also see probably another example. Let's see. I'm gonna find one to down. Let's see something recent. Okay, I mean, this is recent price action here. We formed this massive inversion and price comes into it and gives us a decent move out of it, like 5%, nothing too crazy. But that's pretty much it for inversions. Like, I just want to show you that there are key areas in the market where if you see this combined with some other confluences, you might start to think that we are going to have a reversal. We can even look at this on the dollar index here on the monthly time frame. We see that we were just ranging here. We know about ranges, and we formed this bearish inversion like so. And then once we form that, this can be our confluence to potentially shorting the market, shorting the dollar, and we moved about 9% down. So that's pretty much all I have on inversions. I was a little jumbled. Hopefully you guys understand what I'm talking about. If you don't, just drop a comment and I'll go over it. But I'll see you guys in the next video.